Welcome to the Financial Freedom Secrets Show. This is your host, Jackson Milan, the Wealth Mentor, helping business owners create financial freedom faster by mastering the language of money. Want to see how well you're tracking towards financial freedom? Complete our 40-point financial performance scorecard at wealthhealthcheck.com.au. That's wealthhealthcheck.com.au. The average score for most business owners is 18 out of 40. So complete the scorecard now and see how well you're tracking towards financial freedom.
G'day guys, Jackson Milan, the Wealth Mentor, and we're here for another episode of Financial Freedom Secrets. And I've got a new friend of mine, Leeroy Beeby from Check the Level, here to talk to us today around all things cash flow and profitability for trade businesses and construction businesses. We were connected through a mutual friend of ours and also a client of ours. And I'm really excited to share some of this knowledge because from our conversation that we've had, it absolutely blew my mind around understanding job costing, profitability, and all of these kind of common pain points that most trade businesses have. But there are solutions out there. So Leroy, thanks for joining us, mate. How you doing?
I'm good yourself, Jackson. Glad to be here.
I'm doing really well, thanks, mate. So let's talk a little bit about you and your story. So for those who don't know you, mate, tell us a little bit about where you've come from and what's got you to where you are.
Cool. If you don't know where that accent's from, it's a South African accent. So I was born and raised in South Africa. Spent the later years or like university years at the University of Cape Town. So that's where I qualified. I mean, a little bit about myself. So I come from a family of small business owners. Growing up, I watched my parents start 12 small businesses. My dad's in construction. He's got 40 years of construction experience, over 40 years. So quite a few of those businesses were in construction. Like any child that comes from an entrepreneurial family, growing up, one thing I remember, my parents they were absent a lot on working on the business, trying to provide for us. And anytime they were around for dinner or anything, there was always arguments about money, right? Like, where's the money? Cash flow problems were quite rampant in our family. And that ultimately inspired me to lead a career in business. So I've qualified as a chartered accountant from KPMG. I ended up moving overseas to do some consulting in Bermuda. So basically, I was designing and implementing financial systems for large organizations there. And then I sort of got a little bit of a bug for the technology space. Bermuda is also a small spot. And I always wanted to study abroad. So I actually ended up doing my MBA at the University of Toronto, after which there's actually a really good startup scene here in Toronto. They're throwing a lot of money in technology. Sort of got the bug there, and we decided to start Check the Level after I finished my MBA. So
fantastic, mate! Wow, you've jumped around a lot. I'm sure you saw some interesting tax strategies in Bermuda, working with these big companies. I'm sure. I heard they don't pay much tax there, do they?
Yeah, I know they don't. And I think I was paying like 10% tax on my payroll. It was like ridiculous. Like
that'd be nice. That'd be nice. We can always dream, right? So, mate, let's talk about software. Obviously, you've got this great services background. You worked at KPMG, which is very much consulting oriented. Why software and not consulting?
I don't know. I've always had a bug for technology. So like working at KPMG, it's long hours. The work's not very rewarding. Most people don't like it when the auditor comes into the front door. Honestly, I nearly got fired twice at KPMG because I just struggled with authority. I think that was just a major problem growing up. I struggled with authority. And I think most entrepreneurs do. When I looked at KPMG and I started this business, Check the Level. So Check the Level has a software component and has a bookkeeping service component. I really wanted to make sure that I was building a company that I wanted to work at, like when I was at KPMG. I wanted a technology-focused company because a lot of the back office stuff can actually be automated. A lot of the problems that I see in businesses today is just the lack of implementing those processes or understanding the value those processes bring. So a big part of starting this company was, okay, hey, it needs to be in a technology company. Obviously, there's a lot of upside to it as well, which helps if you pull it off. Specifically, really wanted to build a company that I worked at, had a good work culture, wasn't focused on submitting timesheets or like really budget focused. I want people to come into the work and enjoy working. I think technology is a great place to like create that work culture, especially in the accounting industry, right? I agree. There's a lot of antiquated accountants out there, and there's a lot of room for technology to help it. And funny enough, the more I sort of get into this space, we've been at it for about three years now. One thing that's become quite obvious to me is that most software founders don't have an accountant as a co-founder. And a lot of the problems we're solving today are really the disconnect between, project management or your CRM and your accounting software. Some of the mistakes I've seen some softwares make is from an accountant's perspective are absolutely jaw dropping. Really trying to solve that problem with technology. I think there's a big gap in the market for accountant founders to actually solve a lot of the business problems guys are facing today.
And I think that's common through a lot of these businesses, particularly in the trade space, right? Because I think in the trade space, and this is where a lot of the issues stem from, is that they're really great technicians. They know their trade back to front. They are phenomenal at what they do. They take a lot of pride in their work. They potentially rely on word of mouth and referral to grow their business. And most people don't get into business to know their finances and know their numbers. So I think this is a really great segue into your software. So give us a crash course on what Check the Level is and what it does.
Yeah. So Check the Level is job costing and bookkeeping software for contractors only. So we work with contractors only at the moment. Effectively, what we're trying to do is really simplify the bookkeeping process for the contractors by just helping them keep their paperwork and expenses organized. So we're focused really on cost management. So your team can clock in, clock out of our software. You can assign gross wages and labor burden percentages to that, so you can get real-time wage cost information. You can upload receipts and supply invoices to our software on a per-job basis. And basically, we take all that information, plug it into your accounting software, and then give you some really interesting reports, right? So one of the reasons we started this company, I was reading a book. It's called Markup and Profit. And in there, they talk about, within 10 years, 9 out of 10 construction businesses fail. And they fail for primarily two reasons. One, not charging enough, classic. But the second, which is, more hard to actually get clarity on from a reporting standpoint, is the whole idea about financing job costs, poor cash flow managing, living from one deposit to the next so that you can just make payroll on the current job. And, when we looked at that, we were like, okay, well, good accounting and reporting processes can solve both these problems for a business owner, right? Like if the reporting is easy to understand, and I accentuate easy there because I think a lot of the times, contractors are just thrown, here's a balance sheet, here's a cash flow statement, here's an income statement. That's how your business is doing. And it's just like, what? Like, that's not like, yeah. When we started the software product, like one of the questions that I couldn't find any product to answer was, okay, so we know that pricing is a systemic problem and, you need to create good reporting around that. But why isn't there a solution on the market today that says, hey, here's a job that you did. It was 1-2 weeks or even 6 months. How much of the job's cost did you actually finance and when? That's also the important part. When did you start financing those job costs? We looked at the market. There was no solution that could quite easily tell you whether you are financing job costs or not. So we basically one of the big things in our product was we wanted to show our users, when exactly they started financing job costs so that they can go, okay, if I had to repeat this job, I would need 40, 50K to do it again. But, if I increase my deposit that I ask up front or improve my supply terms or my collection terms on my clients, I can improve the cash flow within my business. We've termed those holy shit graphs internally, because every time we show a contractor like, hey, this is what your job looked like from a cash flow perspective, the first thing they say is like, holy shit. So
I love that, mate. This is fantastic. This is a dream come true. Because this is the problem, right? Most of these construction businesses are walking in the dark financially. It's just kind of like suck it and see, both pricing and cash conversion cycle, where they don't actually understand where that inflows and outflows fall. So they're having to take on more jobs to finance the last one, and it just becomes this vicious cycle of robbing from Peter to pay Paul. And it sounds so logical for us, but even like in the finance space, like I'm sure you've seen this, there's formulas to calculate accounts receivable and accounts payable days, but they're averages. They are not job by job. And what's really interesting is when we turn the lights on financially with these kinds of tools, we can actually say, okay, cool, this job is profitable, this job wasn't, and this one you were in the hole and it took you until the 3/4 of the project in order to even recoup your costs. This one you actually did well. And having that level of business intelligence is the difference between keeping your head afloat, particularly in this toughening economic climate, and going broke.
Yeah, exactly. I think, when we look at our most profitable clients, so we're working with over 60 contractors now, and that number's growing like 5, 10 pretty much every month. When we look at our most profitable contractors, the one thing that they all have in common is they are like meticulous when it comes to their numbers, right? Like they are reviewing their numbers every week, looking at which jobs are the most profitable, which aren't the most profitable, double checking their break even and a whole bunch of other reporting tools to stay on top of it, right? Because construction is very unpredictable in its very nature, right? Like the weather can delay a job, customers don't pay you, whatever it is. So it's really important that you stay on top of that. And I think that's missed quite a lot in the space. Is like, what is a good bookkeeper, right? Like, what does a good bookkeeper for construction look like? And I think, again, because a lot of contractors don't have that background, they're just trying to find the cheapest solution, but not realizing that they're probably leaving anywhere between 20 to 30% of their revenue by going with a back office team that's just not competent in construction accounting. Like, you've got to value data in this industry. Like, data is so important. It's the best tool you can have to remain unemotional, make good business decisions, and just help take your business to a comfortable level, right? Depending on where you want to take it. But to get control of that business, you have to know your numbers.
Yes. I think this is critical, right? This is where the accounting transitions from just keeping the tax man happy to being a tool that you use to make business decisions. It's all about where this goes wrong. And I think this starts with pricing. Leeroy, like for many people, they think that when we're talking about finances, it's all about reviewing and cutting expenses. And sure, there's many businesses that do have some fat that needs to be trimmed, but profit is made in pricing. So where do these general contractors get it wrong when it comes to their pricing strategy from your experience?
Yeah, this is quite a complex topic, and there's a couple of avenues that I'm going to go in here, and I'm going to highlight the first things that come to mind, like off the top of my mind. And I think the one that a lot of people don't get right is the overhead, right? Like going in to a sales call with a customer and asking them, hey, what is my competition pricing for this job? And then pricing your job based on that. It's just a recipe for disaster, because every business is different. The premise between like your markup and margin, right? So that's, markup is your gross profit divided by your cost of sales, and your margin is your gross profit divided by your sales. Knowing that number and having an accurate number around that is incredibly important for you to understand whether your jobs are generating enough cash to cover your overhead. So step one, there's a couple of things I've said there, but I think the most systemic problem I see amongst business owners is their reporting is just not set up for their business. I talk a lot about chart of accounts if you hear me on other talks or on our website or anything like that. And really what your chart of accounts is, it's just how you index financial transactions in your business. It's like, hey, so every transaction that meets these requirements gets classified in this bracket. So
yes,
one way to think of it is it's basically the financial dictionary for your business. It's how you interpret financial information in your business. Now, a lot of the times what I find, I always like to give the example is contractors are going to a French class but have a German dictionary.
Yes.
It's not going to work. A lot of times the biggest light bulb we have with our clients is like, wow, like actually I'm looking at my profit and loss statements and this makes sense to me. And then just bringing it back to that gross profit, it is incredibly important to have an accurate gross profit number, to know how much profit your jobs are generating so that it's covering that cost of overhead. You can quickly see if you're underpricing or your team isn't efficient enough if your gross profit isn't covering that overhead expense, right? And the next thing I think I get, the second biggest mistake I see, not all the overhead being accounted for properly. So like you sort of highlighted this earlier, there's financial accounting and there's management accounting. So financial accountants are really focused on ensuring that once a year at tax time, filing taxes is really simple and easy to do. But what sort of happens is that there are operational expenses that the tax department doesn't recognize, and there's operational expenses that the business recognizes. So you get this difference between financial and what I call management accounting. So classic examples of this are owners' draws and dividends. So if you're a sole prop or a partnership, technically your salary as an owner is not on the profit and loss statement. So if you just try and take your expense amount and say that's your overhead, you're probably understating it by your either your draw, if you're paying yourself in a dividend as corp, that's not going to be accounted in there. And then the other one is just like your loan repayments and your vehicle lease payments or anything like that. That might not be on the P&L either. And you actually want to incorporate that as part of your overhead. And then the third one, this one's a little more complex. It sort of highlights pricing. And I don't think enough people talk about it, especially in the construction space. There's a lot of talk about this topic in the professional services space, and they actually have full-time employees managing this. But I don't see it talked much about in construction, which is the whole concept of billable versus non-billable time, right? Like, how much time is your team spending on billable and non-billable activities? We've been doing this for a while, and if you can price based on billable hours in a company, you pretty much have all situations covered. Because a lot of times what our clients do is they go, some of the advice there is like, hey, you need to charge a 50% margin on all your jobs to make things work. Now, that might work in a situation where, you've got 15, 20, 30K jobs, and you can double the cost of that to get like 60K. But if we start talking about like, hey, I'm a contractor that does, like small jobs, but I also do massive jobs, $2-3 million, you can't double the cost of a custom home and expect the customer to pay it. So that like generic markup and margin percentage falls apart in that environment. What you actually need is a sliding scale markup based on the different types of the different size jobs that you're working on. And if you charge by the billable hour, or at least use that as a point of reference in your pricing, and understanding billable versus non-billable, like you can cover all those situations. And a lot of what we're working on at Level right now is talking about billable and non-billable, and billable and versus non-billable also applies to salaried employees. So your project managers, even if you're a business owner, like it applies to everything. And that's why it's such a nice methodology from like a pricing perspective, because it covers all situations.
And it makes so much sense, right? Because look, you can't expect that for somebody, let's say, for example, you're paying them $100,000, and you can't expect that their total 40-hour week is going to be on site doing work for clients. It just doesn't happen. There's travel time, there's wastage, there's team meetings, there's admin, there's so many other things that go into it. But it's a big task. It's another thing like we were talking about before. This needs to be easy. And I don't know, there's a lot of owners who know that they should be doing this kind of stuff, but they're just so overwhelmed of where to start.
Yeah.
So how do you work out billable versus non-billable? Where do you even start as a general contractor, as a trade business to work this out?
So it comes down to timesheets. So like, how are you managing timesheets? So let's just say you're paying an employee hourly. Hopefully you've got some sort of time tracking tool that actually helps you figure out how you're paying your employees and what they're working on. So ideally you've got it structured so that you've got a non-billable project or customer set up in your time tracking solution that your team's clocking in and clocking out of. And then they have their normal billable activities happening within, their other customers that they're clocking in and clocking out of. So like I think the easiest solution or the best place to start as a construction business in helping you automate your processes, one, get accounting software. Like I'll always say, start with that. The later you push that out, the more you'll learn to regret it. But the second is just like a time tracking solution, maybe something that helps you keep your receipts and bills and things like that organized.
It adds so much value, Leeroy. I know that in our business, like when we started doing time tracking, like I was always apprehensive to it because of the old kind of accounting timesheet days is a little bit ick, right? But if you do it properly, then it actually creates more efficiency. Like it's the sheer function of tracking the time, even if it's just for on a project basis, like you do it for a month or a couple of months to establish a baseline and then you redo it every couple of months, right? But the sheer function of tracking typically improves efficiency by like 15%. Because you're like, oh shit, like I actually am more accountable to where my time is going. So therefore, because you're focusing on it, you improve it.
And I mean, even if you're salaried employees, it can be difficult to do time tracking. So one thing you can do is just get more pedantic with your calendar. So start blocking out your calendar for time, reflect at that over a month, maybe look at like a week or two, and then just annualize that. Just keep an eye on like an average moving target. That can do wonders from like a pricing and just helping you understand how you're spending your time perspective.
Beautiful. I love it. Fantastic. So look, there's a point that you raised at the beginning of talking about pricing around understanding gross profit, right? And for looking at lots of different financials myself, particularly in trade businesses, there's multiple ways this is done. So what's your philosophy on the items that form part of a cost of sale in a trade or general contracting business?
Yeah, it's easy. Anything that's in your estimate, so anything that's like a number that you've exactly tied, so it's not like a percentage or anything like that, that should be cost of sales. So materials, subcontractor costs, any like indirect, like equipment rental, stuff that's easy and conveniently can be traced to the job. And normally that's through your estimate. The most common error I see is from an accounting standpoint is your field staff wages not getting allocated to cost of sales. So most accountants are trying to make their life as easy as possible, which means let's just take all your payroll expenses and put it in one item. But payroll is a massive expense on a lot of contractors' businesses. That shouldn't be there. Like if your accountant hasn't asked you what departments your employees are in, that's often a red flag that you probably don't have a good bookkeeper.
Makes a lot of sense. Cool. Great. Fantastic. All right. So assuming that people have got this clarity on their pricing, which for the sheer function of having clarity and not just kind of doing a guesstimate pricing, that should improve the quality of our pricing and therefore our profitability on our jobs. What's the next big mistake that you see contractors making when it comes to managing their cash flow and profit in their business?
Not reviewing it often enough. You need to be looking at that at least monthly, building in that habit of going, okay, like what are my numbers doing from 1 month to the next, right? And then you can take that a step further and you can start setting targets for each month. So setting up a budget for your business, because the most well-run construction businesses are pricing based on where they expect to be in the future, not what they have been doing historically. So if they want to grow, if they want to, there's more capital investments involved, you want to set up a budget and see how you're performing in relation to that budget. At Level, we have something pretty unique. We call it our health check week. It used to be 1 week, now it's 2 weeks. But basically from the 22nd to the 1st of every month, you get to sit down with your Level manager who's assigned to your file and review your numbers. So it's like either we can do it as you can go as far as getting a budget, so we can prepare a budget for you and review the numbers, or you do a historical analysis. It just depends on the level of support you want. It's amazing to see how owners grow just from that like recurring hey, let's just take a look at the numbers. What happened this month? Why is this number this number? Like, oh, your overhead's going up. Like, how can we prevent this from happening? It can really help you just get a better sense of your numbers, help you feel more confident that your business is on track. I think the hardest part is just, when the business isn't doing well, coming to terms with that. But you need to know that to be able to move forward. You can't build a sustainable business or a business that you can be proud of by just sweeping the numbers under the rug and not dealing with problems. So I would say that's probably the second biggest mistake is just not having a routine, recurring and timely review of your numbers. And not being afraid to ask why, right? Like I think a lot of times you'll just nod your head and say yes, but you've got to sort of be confident to dig into that and try and figure out what's going on there.
Yeah, this is music to my ears, mate. Look, I see this all the time, but as soon as times start to get tough, people bury their head in the sand. Like, I know what the numbers are. I don't need to look at them. Like, I don't need to still look how shit they are. And that's when you need to be looking at them more, because there is a story that those numbers are telling you, and that allows you to work out, okay, firstly, how do you get out of that situation? And then secondly, how do you avoid getting yourself into that situation again? And there seems to be just so much anxiety around numbers, particularly in the trade space, because let's face it, these are not financially oriented people. But what's interesting is that when they start going through this process, when they start having these conversations, when they build what we call money muscle memory, they actually get confidence. They get excited about the numbers, even when they may be not so great. They feel like they're in control and they're in that driver's seat. And I think the biggest challenge I see and the biggest frustration in the trade space, which to be fair, it's something that for many of our clients, they've been looking for a solution, is that job-to-job profitability and the job-to-job cash flow. Okay, I'm winning these jobs. I've got all these projects on the go, but I feel like I'm out of control. Like I don't have an understanding of what is going on a job-to-job basis. How common is that, Leeroy?
Yeah, no, that's really common. And just on that point, like I'm of the opinion that job costing is the accounting department's problem. They should take ownership of that process. And I think a lot of the times owners are trying to find like someone to take responsibility of this, and they're just not finding the people that are willing to take that ownership, right? So, because job costing is all about, especially when you're trying to see the cash flow side of things, that is all around like recording bank transactions. Like your accounting software can do most of that in the same time as you're doing your bookkeeping, right?
Yes.
There just needs to be processes from your bookkeeper that says, hey, let's make sure all the transactions are being accounted for. Let's make sure we're putting in those financial controls and systems to ensure that the data quality meets impeccable standards. Because I think that's the biggest issue. One of my biggest pet peeves is just the data quality. Like we took on a client recently. They're paying $2,500 a month for an accountant, their accountant. They couldn't even get their profit and loss statement like within 6 months. You're paying an accountant that much? If you're paying your accountant $2,500 a month, assuming you're giving them everything they want, they should be able to give you a P&L in a day or within a week.
Easy.
Like if you're not able to get that, then there's an issue. And I think the other issue around like why people don't understand their job costing information that well, outside of like not understanding how important it is and like how much it can really move the needle on your business, I think also a lot of times they aren't necessarily finding the support in terms of like how to understand and interpret these numbers, right? I think one of the biggest compliments we have at Level is like our clients like to say like, hey, thank you for taking the time for me to understand that, right? Like you guys are really receptive around answering my questions. Whereas I think a lot of accountants just go, your gross profit is 50%, your cost of sales was X, Y, and the owner's just like, okay, you just spat out a whole bunch of numbers at me or you showed me a spreadsheet. And it's just like, it goes over your head, right?
Yes.
Numbers. So
I think that's critical, mate. Let's face it, most accountants speak a different language. They're not necessarily renowned for being like good with people. Let's face it, they're typically in the dungeon and in the dimly lit area, really deep in the financial statements. So this is why I love what you do, and the area that you specialize in is because it makes it so approachable, so easy. Because this is about education. The software commoditizes and gets people out of the weeds. And then it is the strategy and the education that is layered on top of that drives the real results. And this is why this is such a great solution. So, mate, let's talk about what separates PAC from the top 1% of general contracting businesses. What are the top 1% doing that is allowing them to navigate the current environment? Because obviously we're in a really perfect storm, right? We've got supply chain issues globally, which means that materials and supplies are really hard to come by. We've got almost a fully employed workforce. It's hard to get good talent. It's a really tough time. So, and of course, with interest rates going up, inflation being an issue, discretionary spending is something that's being scrutinized. So people are considering more when they're looking to make these big investments. So what are those top 1% doing to stay relevant, stay profitable in 2022?
Yeah. So again, assuming they all have like good financials, all of them have good financials and are staying on top of that. A lot of them are dialing down on their sales process. I think now that we're entering this recession, really got to avoid bad customers, right? Like the worst thing you can do is get into a situation where a customer doesn't pay you on time, because it really can put a lot of strain on your business. So what I'm seeing among our clients, again, is they're reducing discretionary spending. So they're cutting down the budgets. Two, they are double downing on their sales processes. So understanding deeply like what makes a good customer, what makes a bad customer, and how to go after those customers. And and three, I would say, from a talent perspective, just making sure that the guys that are doing well are staying rewarded, right? Like whether that's through a gross profit percentage share, so giving your team a bonus after each job if they meet their targets, or just maintaining a good work culture amongst the team, and incorporating the team in the decisions and the worries, right? Like I think one of the exciting things we see a lot of our clients, because a lot of our reports are actually graphical, right? Like we do have the whole like spreadsheet thing, but what we're finding is most of our clients actually prefer the graphical representations of things. So like, because it's easy to see like, oh, this is where it went below zero, so it wasn't a good time. What we're seeing is our clients are actually getting their team involved in those report analyses, so they can see like firsthand what's happening in the business and also contribute to helping improve it.
Beautiful. I think that's great advice, mate. Fantastic. But let's talk a little bit about an ideal client for you. And so you're based in Canada. What's the geographical limitations of the types of clients that you can work with, and who is a perfect client that would be able to get the most out of the software and the solutions that you offer?
Yeah. So we work with clients in the US and Canada. So we work with contractors in any of those regions. Our clients are typically anywhere from like just getting started to around $5 million. We can work with larger clients, but there's obviously quite a larger change management that goes behind that. the deciding factor is inventory, right? Like if you've got a lot of inventory in your business and you're having to manage a lot of inventory, we just don't have solutions for that just yet. So like, helping you figure out like inventory counts and picking slips and stuff like that. We just haven't focused on that. But if you don't have a material amount of inventory and you're a contractor generating, less than 5 million, although some GCs that if you're like a 5-man team, you could be generating more than that, we can still work with you, right? Like we actually, GCs and renovators make up most of our clients. So we tend to work quite a bit with them just because, the jobs tend to last a lot longer, right? Like the timeframes are also quite a large component to that. If you're dealing like with multiple jobs, like if you're a lawnmower, right? Like a landscaping, lawn mowing, multiple jobs, you might not be the best fit for you at this time.
Makes sense. Cool. Yeah. So it's that longer cash conversion cycle, kind of the lumpy cash flow kinds of trade businesses that are going to benefit the most. Awesome. Great, mate. So if somebody's watched this or listened to this, they've loved what you had to say, they want to get on top of their pricing, improve that kind of data intelligence, understand that job costing piece, improve their financial reports. What's the best way for them to get in touch? And are there any resources that you can share to get them started?
Yeah, so visit checkthelevel.com. So there you can book a call with us. Also, if you move to the bottom of our page, there's a whole bunch of like highlighted tools and webinars that we have. Like quite recently, we did one that's very popular, figuring out your charge out rate. So, talking about your overhead allocation rate, profit rates, and, that good methodology of pricing around billable hours. We actually have a tool for that. Alternatively, we do have a Facebook group called Job Costing and Bookkeeping for Contractors Only. It's not hard to miss that one. Join that group, and every week or every 2 weeks, we have like a Q&A. There's always resources. We've got over 150 contractors on there now, and it's growing. So we've got a real good community of contractors there and bookkeepers who can help answer any questions you have, regardless of where you are, right? Like these accounting and bookkeeping problems, the nice thing about it is it's global, right? So like we all speak the same problem, I guess, from an accounting perspective. And then our software, if you go onto the App Store on your mobile device and search, there's a lot of levels out there. So search checkthelevel.com and it should come up. And I think we're available in Australia and New Zealand, the app. So you might be able to pick it up there as well. So
perfect. Fantastic. Well, guys, I think this has really reminded us that our financials and our software, bookkeeping software, is not just about keeping the tax man happy. This is about making better decisions to drive performance and profitability. You can't sleep on it. It's so important. So hopefully this has reminded you of the importance of this, to reevaluate your relationships, reevaluate how you're getting value from your existing software solutions, and using these to support you to grow a better business. As a Leeroy, mate, I appreciate you making the time, and look forward to catching up again soon.
Likewise, Jackson. Thank you so much.
Take care, mate.